Welcome back everyone. I hope you're having a great day. And in this video, we're going to take a look at my dividend growth portfolio that now has a value of over $97,000. I'm going to share with you all of the stocks that I own, how much dividend income I collect, and how this portfolio performed in the month of April 2021. And this account is made up of 25 blue chip dividend paying stocks, and these are some of the strongest companies in the world. They all generate billions of dollars in income and cash flow every single year, and these are the companies who are able to return that capital back to their shareholders in the form of a growing quarterly dividend. And the long-term portfolio goal is to one day achieve true financial freedom and have the passive dividend income that I collect from this portfolio cover all of my monthly bills, so that I would no longer have to work for money and my investments could pay for my lifestyle. And now before we take a look at the performance of this portfolio in depth, I'm going to ask you to please hit that like button and subscribe. I am the Gen Z investor, and every single day we talk about the stock market, going over different stocks you can buy, any major market news, and of course we track the progress on my goal toward financial independence by growing this portfolio that is now sitting at a value of $97,589. So now if we kick off the video and get started with the portfolio overview, like I mentioned, it's made up of 25 blue chip dividend paying companies, and right now, this portfolio provides me with $2,171 in annual passive income. So right now, without having to clock in at a job, my investments will pay me $2,171 over the next 12 months. And we can see at this current level, the portfolio has a yield of 2.2%, and my current yield on cost is at 2.76%. And regarding the volatility, right now my beta is at 0.88, so I'm slightly less volatile than the overall market. And over the longer term, as I continue to contribute more capital to this portfolio, buy more dividend paying companies, and over the long term, as I continue to grow that annual payment every single year, my annual income will continue to grow as well. And the value of $97,000 is very close to approaching the milestone of $100K, and hopefully over the month of May, unless we get any major correction, I do believe I will cross $100,000 in total portfolio value. And right now, 74% of my dividend income is considered likely safe, and 26% is considered borderline. But if we take a look at the breakdown, the 26% of my income that is somewhat borderline safe is made up of these four companies: AbbVie, Bank of America, JP Morgan Chase, and AT&T. And all four of these companies have very strong cash flow, and I'm not worried about a dividend cut coming from any of them over the shorter term. So although 26% does seem like a lot to be considered borderline safe, the largest position of that is AT&T, which makes up 15.7% of my dividend income. But if we jump back to the overview, right now, over the past 5 years, my average annual dividend growth rate across all 25 of my holdings is at just below 7%. And if this rate continues going forward, it means my annual dividend income that currently sits at the $2,171 is expected to grow by 7% per year. And with inflation coming in between 2 and 3%, every single year, I'm making more money than the previous, and it's growing at a rate faster than inflation, so I will actually have more spending money and more buying power every single year as well. And in the past month, I got some major dividend increases from some of my core positions, and they included Procter & Gamble. The Dividend King raised their dividend by 10% and is their 65th consecutive year of dividend growth. Then Costco raised their dividend by 13%, which is absolutely incredible. The Southern Company, a very consistent utility brand, raised their dividend by 3.1% in the month of April as well. Then we have Johnson & Johnson, who raised by 5%. Pfizer announced no change, which is a great sign because they were expected to reduce their dividend. So I'm very happy seeing this. And of course, Apple also did raise their dividend as well by 7.3% over their latest report. So a bunch of dividend increases that added to my annual passive income without me having to do any work or buy any more stocks. And now if we take a look at how the portfolio actually performed in the month of April, we can see the portfolio started the month on April 1st with a value of $90,901. And in the past month, I received $109 in passive dividend income, and this is the month that's lowest on the quarterly chart. I contributed $2,500 into this portfolio of my own hard-earned money, and the actual value overall grew by $4,080, and that means we finished the month with a total portfolio value of $97,590. So a very good month. The market continued to trend upwards, a nice $109 of passive income that I didn't have to work for. I hit my goal of contributing $2,500 of my own money into this portfolio and some nice share price appreciation of over $4,000. And what we really care about is the growth of my annual passive income. At the beginning of April, the total amount was at $2,061 per year, but by month end, that grew to $2,171. And we're going to take a look at how I was able to grow it by $110 over the past month. And we can see that I made 2 buys in the month of April. And the 2 stocks that I purchased were Verizon and Kimberly-Clark. And I made a full video about 2 weeks ago going over these buys and my logic behind them and why I added to these companies at this current point in time. And in total, over the past month, I purchased 20 shares of Verizon, who pays out $2.51 per share per year, which added $50.20 to my annual dividend income. I also purchased 8 more shares of Kimberly-Clark, who pays out $4.56 per share, and that equals another $36.48 to my annual passive income. So the total addition from my 2 purchases was $86.68. And the remaining growth to get me up to that $110 came from the dividend increases from 5 of my holdings. So Procter & Gamble, I own 22 shares. They added 32 cents per share per year, which added a total of $7.04 to my annual income. And then we have Costco, Southern Company, Johnson & Johnson, and Apple, who all raised their dividend as well. And in total, all of these increases brought up $23.26 in annual passive income that I didn't have to purchase myself, and it came from owning dividend growth companies. And if we add up the $23.26 and the $86.68, that gives me a grand total for the month of April and an increase of $109.94. So that's where the total gain of $110 to my annual passive income was made up of over the past 30 days. So a very good month. I love seeing 5 annual dividend increases from some of my core positions that I plan to own for the very long term. I made 2 new buys, nothing dramatic over the past month. I couldn't find any good deals, and I do have around $2,400 sitting in cash in this portfolio, ready to make new buys whenever I find a good deal on the market. So we can see of the total portfolio value of over $97,000, $2,400 is currently sitting in cash. And overall, I am up over 20% in market appreciation in this portfolio. So for even owning very boring, conservative, blue chip dividend paying companies, you can get some nice share price appreciation as well. And now we're going to take a look at my portfolio spreadsheet that you can have access to for free by using the link in my description. It looks like this. It's a very simple Google Excel sheet. I will never charge you for access to this portfolio. It will always be free, and it's always linked in my description down below. And essentially what it has is all of my companies laid out, how many shares that I own, the current market value of each position, the gain or loss on each holding, and the actual dividend information for each individual stock as well. You can see my allocation to each holding, what I'm up in them, what I'm down, and how much passive income I collect every single year. And if we take a look at my sector diversification, we can see that I am heavily weighted toward the tech sector, which makes up around 37% of my overall portfolio. Then I have large weightings in consumer staples, financials, communications, healthcare, utilities, some cash, and only 1 industrial holding that makes up 1.3% of the portfolio. So although I am heavily weighted toward the tech sector, I am not worried, and I actually do not believe I'm overweight in that individual sector. My largest holdings in that sector include Apple and Microsoft, which make up close to 25% of my overall portfolio. They're the 2 largest companies in the S&P 500. They both have rock solid financials. They just posted incredible quarterly results, and I think over the long term, they will grow very nicely. So I do not feel worried whatsoever owning these two companies and having them make up such a large chunk of the overall value of this portfolio. So although it does look like I'm really overweight in tech, those two companies really make up a majority of this entire sector. And if we go sector by sector, we can see I own all the companies that people use every single day and that are staples of our economy. So like I mentioned, Apple and Microsoft are by far my two largest holdings, and in total represent 25% of the entire portfolio value. I own 101 shares of Apple, which has a market value of over $13,000, 44 shares of Microsoft, which is worth over $11,000, and then to wrap up the tech sector, I own Visa, MasterCard, Broadcom, and Taiwan Semi. So I have exposure to the credit card and debit card industry through the two market leaders in Visa and MasterCard, and then some semiconductor plays with Broadcom and Taiwan Semi. Then next I have my financials. I own 4 banks, which include JP Morgan Chase, Bank of America, the two largest by market cap in the United States, and then I also own the Royal Bank of Canada and Toronto Dominion Bank, which are the two largest by market cap up in Canada. So I picked the winners of the financial sector, going with the 4 big banks who provide me some great passive income, and I do believe these companies will survive for long into the future. And of course, as a dividend investor, I do have my exposure to the communication sector through AT&T and Verizon, which provide investors with insanely high yields and consistent cash flow every single quarter. And these are two companies combined make up around 10% of the total value in this portfolio. And then of course, we enter into the healthcare sector where I own AbbVie, Johnson & Johnson, Merck, and Pfizer, 4 big names, some nice consistent dividend payers. Johnson & Johnson is a dividend king. Merck and Pfizer are very consistent, and AbbVie, since 2013, has been a very solid performer with massive dividend growth. And then if we shift over into some consumer discretionary, we have Home Depot and Lowe's, and I believe those two retailers will be very successful over the long term, even as we transition to an e-commerce first society. I think the home improvement space is always going to be a type of store where you go in person to shop at. It's going to be very hard to transition to a full e-commerce way of life when purchasing tools or different home supplies that you really need to see with your own eyes and get a feel for the product in the stores. And I think Home Depot and Lowe's are going to dominate that market for decades to come, with really not that much competition coming from other retailers due to the nature of their operations and how strong these brands are already well established all across the nation. And then of course some consumer staples, which I consider Costco a consumer staple, along with Pepsi, Procter & Gamble, and Kimberly-Clark. So Procter & Gamble and Kimberly-Clark dominate the consumer product sector, selling the necessities we use in our homes every single day. And combined, these two companies own all of the market-leading brands, and I don't see any competitors coming out and pushing them away of those number 1 and number 2 spots. And then of course we also have Pepsi, and if you're a follower of the channel, you know I am a big bull on this company. I love Pepsi. I love how well diversified they are in the snack food and beverage sector. And if you're actually unaware, 55% of their revenue, so more than half, actually comes from their snack foods. So when people think of this company and you really don't understand their business, you really only associate Pepsi with the soft drinks. But actually a majority of their sales are coming from this food, and that's what I love. And they have a nice exposure and a new plan to get into the healthy food market, which I think is going to explode over the next decade. And then of course Costco, another major retailer. I love it. I shop there myself, and I gotta own the stock. And then of course to wrap it up, we have some more boring companies. I own 3 utility companies in Duke, Southern, and NextEra. NEE is for my renewable play. They're a nice dividend paying company. They're the market leader. They have very nice exposure to the renewable space. And then I own some more traditional utilities as well through Duke and Southern for that high consistent income every single quarter. And finally, the last holding in this portfolio is a railroad. It's my only industrial stock, and that is ticker CNI. Bill Gates is actually one of the largest shareholders in this company. It's one of the strongest railroads in the world. And I think throughout North America, they're not building any new infrastructure in that industry. So the existing brands like CNI will continue to dominate for many years to come. So those were all of the holdings I own, nicely diversified. Of course, I'm sure you can recognize all the brands. Nothing surprising, very boring companies that I expect to provide me with consistent returns over the long term. I don't own anything too speculative in this portfolio. Nice blue chip, dividend bank companies who grow income and revenue every single year and reward their investors with that growing dividend as well. So now we're going to kind of wrap up the video. This was my April 2021 update in my dividend growth portfolio. We're fast approaching $100,000 in total value, and hopefully over the upcoming weeks, we will hit that mark. So I want to thank you for watching the video. Please hit that like button, subscribe, and join the community if you already haven't done so, and I will see you in tomorrow's episode.